So I loved gold and silver when I first got started with my dad and started researching it, that sort of thing. But what I really learned was the importance of gold being a cornerstone asset to a portfolio. And that may sound crazy in today's world when there's so many financial assets and you have people like Warren Buffett out there saying gold has no utility, it's silly to own it, it's just a rock. But the thing is, he'll say gold doesn't produce income, doesn't generate income or produce dividends, but that's a good thing. You want an asset that isn't going to have to worry about quarterly reports, what dividend it's going to pay, performance. You want something that's an asset that is currency based, that is monetary based. And that's the real key with gold. We've done long-term studies that shows gold in a portfolio outperforms portfolios that have no gold in it. This is a factual, research-based back study that we did over decades. And even CPM Group, who's a consultancy in the industry, they did a study showing that going clear back to 1965, portfolios with 25% gold in them outperform portfolios that have any other mix of gold in it. So it acts, and that's because it acts as a hedge. Look at what happened this year. Gold is up this year, even when the stock market was down. And that's the real beauty of gold. It's a hedge. The purpose of gold isn't really to make money, though. It's really to preserve wealth. It represents wealth. And I understand the argument that some people don't see the need to own gold because nothing really bad has happened. But we're inching toward a system where it's getting more and more risky all the time. And it's better to have some sort of monetary system that would protect you against that. And by that, I mean you having your own monetary system, owning some gold and silver, because politicians aren't really going to go back and do that. There are studies on both sides saying it was the gold standard's fault that led to the Great Depression. There's other studies showing gold had nothing to do with it. It was, other issues. So there are arguments on both sides. It's a whole other topic, but I'm not pushing a gold standard. And actually, I'm a temporary gold bug. Let's put it that way. So when gold and silver become overvalued, dramatically overvalued, especially relative to other assets, I'll be exiting the industry. I'll be selling, 90% of my gold and silver, 90% of my mining stocks, because when they get over, every asset trades, they trade on an exchange, right? So they can go into bubbles. Gold and silver have been in bubbles many times throughout history. I think they're going to go into a bubble again. When they do, and if they do, then I'll be exiting and I'll be buying other assets that are dramatically undervalued, whether that be property or stocks or whatever the case may be. When you buy gold, you're essentially buying real money. If you buy the physical gold or silver, you're buying real money. You're buying an asset that you can use in an emergency, whether that emergency is for yourself or an economic emergency or whatever the case may be. But when you buy gold stocks, you're actually investing in, obviously, the shares of a mining company. And now you're speculating that management company and that stock is going to go up in value because of X, Y, or Z. You don't own any gold when you buy a mining stock. You can never get any gold. Even if they're producing gold, you can't get any. All you own is shares in a company, just like you would if you bought Apple Computer. It's no different. You're investing in a company, though, that is either producing gold or trying to find gold. And that's what your investment is in. And so that's a very different asset class than buying real money itself. You can't do the kind of things that the Fed and other central bankers are doing and not expect there to be any kind of ramifications. It's not all roses just because they've temporarily pumped money into the system and stocks are going up again. That doesn't mean everything is okay. You can't dilute the currency to that extreme and of extent and not expect there to be consequences. They've lowered rates to basically zero. So that's punishing savers. That's punishing one group of investors and rewarding another group of investors. I think there's going to be fallout from all of that. The biggest thing will probably be the dilution of the currency. And by the way, you mentioned earlier, there's been no inflation. Did you know that the purchasing power of this dollar is 1/3 less since Y2K? In 1999, there was a couple of movies about it. It was a fun thing where the computers were going to go over and they weren't going to go to 0, 0. It was called Y2K, and it was going to break down the whole system. Okay, so this was New Year's Eve, 1999. Since the year 2000, the amount of cumulative inflation, just since then, has dropped the purchasing power of the dollars in your wallet by a full 1/3. You can look it up on the CPI inflation calculator. It's right there. And that's assuming the CPI is correct. And a lot of people don't feel it accurately measures inflation. So the idea is that there's been this continual leak going on in the value of your currency, right?
Wow.
And so, of course, it can pick up. The biggest monetary effect could be some type of inflation. That would really send gold and especially silver a lot higher. But it's not about inflation. It's about crisis, right? It's a hedge. It's about hedging against any type of crisis that's out there, whether it's monetary, geopolitical. Gold's gone up a lot during periods of war, which makes sense, right?
Yeah.
It goes up when other markets crash. Gold goes up during recessions more often than not. There's only been 2 recessions in the last 50 years where gold didn't go up. One, it was flat, and one, it was down like 9%. All the other recessions, the gold price went up. It goes up during stock market crashes a lot of times, during other types of crisis. So, whatever it may be, I think there's so much risk in the system right now that it's going to pop gold and silver higher at some point. When the dollar rolls over, it's the reserve currency of the world. It's the last man standing. It's what everybody rushes into, and they will rush into it again in the next crisis. But at some point, it's going to become so diluted that confidence in it is probably going to be shaken. And when that happens, that's when there's going to be some serious monetary upheaval. There'll definitely be a crisis or a series of crises surrounding that. And that's going to be a dangerous time. And that's going to be a time where you don't want to be in dollars that much. You want to be out of dollars. And by then you want to have your gold and silver already bought. You don't want to wait till then.